What is going on, Money Bros? Today I have a little tip for you about credit card reward points and why they are even more valuable than they first appear. If you want to travel a lot, or if you just want to travel and cut down on the expenses of that travel, then reward points are an amazing method for increasing your travel budget or allowing you to travel more. What many people don't talk about are the tax advantages. If you earn $5,000, you're going to be taxed on that $5,000. But if you want to go on a $5,000 trip, there's something you have to think about. Unless you're using credit card reward points, you're using straight up $5,000 cash. And the issue is that's post-tax $5,000. If your tax is a 25% marginal tax, that means above that $5,000, you're looking at earning another $1,200 to $1,500 before tax. So let's step back. If you want to go on a $5,000 trip, that means you have to earn almost $6,500 to pay for that $5,000 trip. Because of that $6,500 marginal rate, 25-30%, you're going to be taxed $1,200 to $1,500. Which means that trip, that $5,000 trip, really is a $6,200, $6,500 trip. And this goes for everything that you spend, because the money you spend is the money you get to keep after taxes, unfortunately. It would be amazing if we lived in a world where if you made $100,000, you got to keep $100,000. Or let's not be greedy, let's say you got to keep $90,000. But the way that the tax structure is set up, for most people that earn a good wage, you're looking at a 40 to 50% tax penalty on all the money you earned through many different taxes. Which brings me back to why credit card reward points are an amazing tax vehicle. Not only do you have to come up with $5,000, say this is the number we're going to use for this example, is if you want to go on a $5,000 trip, you just need to have $5,000 reward points, right? Give or take. And that's very doable with 5 to 6 cards in a year. And the advantage is not only are you getting $5,000 worth of free travel, but you're also saving almost $6,500 of actual cash that you would have had to earn on your own. I came to realize that it's the tax advantages that make it even sweeter. You have to think about reward points in this way, that they are valuable beyond the straight cash value. Another thing to be aware of, though, is if you do cash back, you will be taxed on any money you earn cash back, because that is straight cash, and the IRS does require that you report that. But if you're using airline miles, etc., that is not a taxable event, which is amazing, guys. I can't tell you enough how amazing that is. So good credit is going to reward you in so many ways, and good financial behavior, because you never want to spend on credit cards for things that you would not normally buy. So you got to treat the credit card as basically a tool to spend your cash that you do have, not to spend credit that you don't have. So that is our tip for today, and why credit card reward points are even more valuable than you realized before.